Hey, thanks for tuning back in, guys. So bear with me. We took a massive hit on the portfolio. It looks like we're already negative. It's going to be a red apples kind of day. We did have a little rally, but when I was checking it, it looked like it was my four original positions that kind of gave a big bump. So we'll go through that right now, but wanted to share. So I'm on APMEX. I'm looking at the silver spot price. It's up $4.13 year to date, a 17.2% gain, and it's still outpacing the S&P 500. The S&P 500 is at 15.10%. We had a big dip, so there was a big dip, and what I'm looking at now is silver SLV is taking a dip. It's still at 17.69%, up $3.83, but it's at 25. I think from what my experience was last time tracking the SLV against the silver spot price, it looks like this one reacts first, and then spot price kind of follows it. So it's at 25 right now. I'm guessing that $28 silver is not going to last very much. It's not going to last very much longer, and it's going to end up going down to 25. A-Mark killing it, 30% year to date. It had its dip, and then it shot back up and went down to 32, and about now it's back up to 38. That's at almost $9 gain per share, so it's doing really well. I'm telling you guys, if you guys are silver stackers, you need to get into A-Mark. It pays a dividend, and when these runs happen, I think last year it paid out 5 dividends per the year. I know during 2021 it looked like it only paid out twice, I believe. I'm not too sure, but when I was looking at it previously, there was a lot of dividend payments, and then it kind of slowed down as soon as silver started to stop selling. It kind of reacts with it. So when things are good, A-Mark does really well, and when things slow down, it kind of decreases its positions. So look into that one. SLV, again, we're still tracking. It's still outpacing the S&P 500. So the difference from the last video is pretty big, right? So I believe it was 30% is what it was outdoing the S&P, but we did have a downturn in the market. Tech had a big hit. So here is the portfolio. Like I said, this is showing $57 up, but it's from the 4 original positions that I had in there. Veralto is doing really well. It jumped from 96 all the way to 104. It's an $83 gain. Hecla Mining is still in there, $18 plus. This is an original position that was in there before I got into the silver. Ignore that one. Gato Silver took a big hit. It went back down, and so it's only plus $6, plus $5, plus $4. This is Arcadium. That's an original position. So I did all the numbers. The 4 positions that I had in my original portfolio, or actually what's holding this portfolio up, it's at 61.97 is the gain. And then when I took those out of the equation, it was a 38. With the positive positions, I'm doing 38 as far as the positive positions, but the negatives outweighed them. There was $42.60 negative from that 38, leaving us with a negative $4.22 loss. So right now, between the silver mining portfolios, when I separate them from the 4 original positions, I'm down negative $4.22. So we're losing right now. Am I panicking? Not really. I'm hoping that I didn't catch it late. So that's what I keep second guessing myself. But from everyone's interviews from the Rick Rule Symposium, it looks like everyone's still bullish. So again, these positions weren't meant to get out until December. We're going to relook at all of our positions in early December, late December, and see if it's worth getting out of. Again, this coming month and September, I believe, are the worst performing months out of the year for stocks in general. Historically, they've been pretty low, and we just had the big dip in the S&P. It went down 208 points, and now it looks like it might be running. So we'll see if it's going to go down even more, or are we going to have a bull run again with stocks? Stocks have been doing extremely well since 2021, and it's been showing 20-something plus gains year after year. We're on course right now for probably 15-20%. Again, above the normal 10%. So, you know, if you were in stocks in the beginning of the year, you're doing good. 15% return is nothing to complain about. Again, we're going to be looking at these. I was considering maybe averaging down in some of these losing positions. Denison Mines only cost, you know, $2 a share. And then Fortuna Silver Mining, and probably First Majestic. First Majestic, I've been reading a little bit more about and seeing the interviews. I know Rick Rule had talked about his disappointment with the performance of First Majestic Silver. I believe it's Keith Neumeyer who runs this. I think there's just so much, you know, expectation on First Majestic Silver. So we're gonna stay in it. We're down negative $29, which is a, let me see here, a negative 12.43% performance right now. So it is, you know, an okay time to kind of dollar cost average. We can wait for this thing to go negative 20 and then start to average down. So I think, and we're at 35 shares, we'll probably pump that to 50 if we can get, you know, a negative 15. Right now, I kind of do the calculations and figure out if it's worth it or not. And then, you know, we'll go through each one. This one already has 50. This one has 25, so we can average a little bit more. It's kind of too close right now at a negative 8, almost 7%. We're waiting for that negative 10% drop, because these dips, they'll dip and then they'll dip again. And then you buy the first dip and then you run out of money for the second dip. And then if it's really bad, you get to that third dip and you just look at that negative number and you think, Jesus, why didn't I wait to buy the actual dip? And I've done that many times. So I'm kind of on the cautionary side. When it goes negative 12, it can go to negative 15, negative 20. So we'll just wait and hold off until we add an average down our position. So that's a quick update, you guys, on everything. I hope you enjoyed it. I hope you're looking at it, you know, kind of thinking about what you might be doing. It just kind of takes away from the boredom of the normal stuff that we see on YouTube. And then I'm doing this in real time so you guys can see it. And I think that's what I personally look for in channels. I want to see trades happen in real time. So, you know, I don't just pop up a month later and say, hey, I'm up, you know, 2,000%. You know, I'm kind of like sharing my idea and seeing if it's good. If you want to join in, go ahead, join in. If you don't, you think it's a stupid move, just wait on the sidelines and watch the channel like entertainment. All right, guys. Happy blessings. Happy stacking.